Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A big episode to end out the week for you here today. We're now in the midst of earnings season. We've seen results out from Core Scientific. Riot just reported yesterday. We have the pleasure of hosting Jason Les, CEO, tonight for an earnings-focused Q&A, but we wanted to break into what we're expecting from the miners in this period, talk about some of the key trends and numbers we're going to be watching for, and give you an update in terms of who we have scheduled for interviews. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below what you're watching for this round of earnings and your top pick in the sector. With that being said, let's get into today's video. Okay guys, away we go. Friday afternoon, an event-filled day. We just finished up our weekly Power Play edition here, so that's our members-only video. We go over some of our trades and thesis for the prior week. We've got Jason Les on the podcast tonight. This is the second podcast of the day, our traditional one. We're going to be focused on earnings season. We've now seen a couple of the heavy hitters come out of the gate, Core Scientific and Riot specifically. We're starting to schedule in these CEO interviews. We wanted to talk about what we're looking for, expectations, and some key data points going into this round of earnings. Now, before we do, Bitcoin itself, again, a bit of a frustrating day, was up above 110. Now it's in the 108, 800 range, still kind of languishing in this band we've been talking about.
Yeah, I'm not focusing too much on the daily changes there. I mean, it has pushed back a little bit over the 5 day. We're down, nearly 5%, but we've held over 100,000 for some time now, and I still expect it to stay above that for the foreseeable future, because there's no really bad news out there affecting Bitcoin. People are still buying it. The public companies are still buying it, and buying it far quicker than it's being produced. Only 450 a day produced to Bitcoin. Some of these companies are buying more than that in a day themselves. So I still think we're in a good position. What this provides me actually is when it gets to 106,000, is another opportunity to buy a little bit, add to the hodl in the bank account, and let it ride till in a few years' time. Because if any of those analysts are led to believe what they've come out with their predictions, Bitcoin's in for a far rosier position than we can suggest at the moment. But time will tell, but we'll keep obviously highlighting it on the podcast. But more interestingly, we're looking at the mining shares today, and it's a bit of a mixed bag again. Even with Bitcoin price down, we've got a few in the green and most are in the red. If you look at the day range, though, since the Bitcoin price dropped, as you quite rightly said, from 110,000 back into the 108,000 range, we saw a pullback on all the miners. So there's a little bit more correlation in terms of that volatility today. Most of these stocks are significantly lower than where they were when market or pre-market, because they were all green pre-market. I woke up this morning to a nice green morning, and it's just started to turn red these last few hours. And if you see there at Riot at the moment, having announced their earnings last night, and we'll cover Riot's earnings in a little bit of detail. Bear in mind, we have got Jason coming on the podcast later today, so we don't spend too much time going over their earnings. He'll come out and give us his thoughts on them. Hive also and Bitfarms languishing there, 6 and 5% down today. Volumes, not as high as we've seen before. Bitfarms at 46 million, but their average over the 3-month period is 80 million. So again, it's not volume driven today. Maybe just sentiment, maybe people taking profits, but there's no real reason for the pullback.
Yeah, no rhyme or reason to it. You talk about some analyst targets there on Bitcoin. We're going to get into analyst price targets here in a second. Now, Core Scientific, this has been an interesting development over the last week. We've been following the vote very closely. We were under the impression management was obviously preparing for either outcome. After the vote went through yesterday, came out as a no, we immediately got a presentation deck out from Core Scientific. They had an earnings call yesterday, actually, 11:30 Eastern, 9:30 Mountain Time. So if you were able to catch it, some great nuggets there. Our friend Matt Siegel, again, one of the analysts in the community, caught an interesting, I guess, take on how the call was opened. So Adam came on. They're obviously coming out of a quiet period. We've talked about that pent up excitement to kind of get back in the market, take the gloves off, so to speak. Opens up the call by saying, now that I can speak freely, I want to take time to clear the air. Leading CORZ is a privilege. I love being CEO of the company. The outcome reflects changing market conditions. So that's how he set the stage for the earnings call. I wanted to flip it back to you now, Anthony. Obviously, a little bit of a situation here. The board has approved this vote. Shareholders rejected the vote. That shows some sort of disconnect between the two, but a little more than maybe what meets the eye.
Yeah, and Matt went on to suggest that he was paraphrasing basically, here's why I should keep my job. Now, it's very easy to say that now. I mean, yes, there was a significant package on the table for directors, and we saw that. That was actually one of the things to be voted on. So it wasn't a secret that Adam and two of the directors had these large packages there. Bear in mind, if we go back to the 7th of July when this was announced, if you go back actually a few days before that or the week before that, there were some rumours that something was going to come to fruition with CORZ, and maybe a deal or maybe something else, another takeover, and this is what happened. The share price was $12 a share 7 days before the 7th of July. It then started to rally on the rumours. It got to about $18. And then the announcement happened. And I remember, the initial thoughts of the deal's worth $20.40 to the core scientific shareholders. And you hear that number initially and you think, oh, that sounds okay. But when you take time to read through and then look at the implications of that deal, it was based on a floating share price for CoreWeave, and as the CoreWeave share price drops, then the actual indicative price for Core Scientific dropped as well. So that was the challenge. But if we go back to the 7th of July, and we can show you from here, we can look at the heat map. Actually, we've produced a heat map today, which shows every column as normal. But what I've done there, instead of having the year-to-date position on miners, I've put in the change in price from the 7th of July, which is the CORZ and CoreWeave change percentage. So if you look down that column there and just see how some of these stocks have changed significantly since that date. So you'd have to rewind and determine what the stocks were at that price there. But, IREN's up 253% since that date. Cipher's up 229, Wulf's up 211, Bitfarms up 275, Soluna up 368%. Now, these stocks have really rallied. At that date there wasn't any sort of like big push or big valuations for companies that were looking to go towards high performance compute. And those companies I've mentioned now are all sort of like, starting that process, delivering some sort of HPC, or certainly looking to transmit some of their power towards that. We've seen that sort of rally in the last 2 or 3 months. So on the 7th of July, we didn't see as big a rally. Remember, go back to April, you could have picked up IREN shares of $5 each. Today, they're like $60. So, things have changed in a very short space of time. And I think at that point in time there, $20.40 for Core Scientific had them at a valuation that was certainly one of the highest valued miners out there, even higher than IREN at the time. I don't want to say everything was bad. I think at that time, if I'd have got $20.40 for my share, and that was the case of making a decision that day, I think I would have said, yeah, I'll take the $20.40 and I'll start thinking about where I want to put my investment elsewhere, if not in CoreWeave. And maybe other shareholders thought that, but as soon as we started to read through in the day after day, we saw that change in the CoreWeave price. We've been highlighting it for the last 2 or 3 months in terms of what the deal looked like. And as every day went by, it looked less and less attractive. Maybe, in hindsight, they could have tried and pushed for a lot, but I believe they did try that. I think CoreWeave probably strong-armed them to deliver that deal in terms of, you've got nowhere else to go. We can buy everything like that, take away all the issues, all the risks, and shareholders get a good deal. Well, shareholders of CoreWeave get a great deal, but shareholders of Core Scientific didn't think they were going to get a good deal, and that's why they rightly voted no. But now things now. I spoke to Adam and other members of the senior team in Dubai last week, and he was prepared for, if the vote was no, that they're going to come out, fighting to deliver the strategy that everyone wants to see them deliver. And they put out a presentation and an earnings call to set the scene of how they're going to do that, Bryce.
Yeah, good synopsis there. So really two trends working against Core Scientific. You had the CoreWeave share price deteriorating. We talked about a large portion of those shares being held by insiders. CoreWeave came out of the gates very hot at the IPO, so that was slowly eroding. Meanwhile, the rest of the miners were going through that HPC re-rate. So yeah, the landscape definitely did change. Now, as you just mentioned, they put out a deck alongside this earnings call. Now, that got the attention of a large number of analysts. You can see across the board here, you've provided a few examples. A number of these analysts really coming to the table, echoing what you're saying here is now that this deal is a no, we're not tied or straddled to CoreWeave share price anymore. Let's see what Core Scientific can do on their own. I'll let you walk through some of these upgrades and then we can talk about maybe what they're seeing in the deck.
Yeah, absolutely. I saw a number of updates today. Macquarie have upgraded Core Scientific to outperform, raising their target to $34. It was previously $18. So we know about Macquarie. They've got dealings with Bitfarms. They've also had dealings with IREN. I think half the IREN team worked for Macquarie at some point in time. So they're one of the big investment banks out there, and they've given a strong target there of $34. Craig Hullen, they've upgraded Core Scientific to a buy after the termination of the merger, and they've given a price target of $27. So again, significantly higher than today's price, and I expect that to increase further. Now, you've kindly shown, a list of various targets from tip ranks. One of them on there that I want to focus on there is Darren of Tahahi. I've met Darren before. He's from Roth. We were fortunate to go and visit Hive Digital sites in Sweden together last year, and so I got to a lot of understanding from Darren during that visit in terms of at the time, and we were talking about Core Scientific because it was a case of how do you value these companies that have got Bitcoin mining and HPC. And, he was telling me that, the market would probably look at the Bitcoin mining side as maybe a 2 to 3 multiple, but for the HPC side, certainly 15, 20. And if it was a sort of a hyperscaler, maybe the 25 times earnings. So, you can see from that there, they're impressed, obviously, now that Core Scientific have the ability to lead their own destiny. And with that power that they have, $40 is their target. That's a significant increase. That's literally double what the price is, and it's low today.
Yeah, just phenomenal. So great to see all that. Now, you mentioned they put out a solid deck as well. If we just pull a few slides to really emphasize what the highlights were here, the final slide to me really spoke very strongly. 4 deliverables expected in Q4, the signing of at least one new co-location customer, one more power contract or an existing site upgrade, new major power contract in a top US market. So we've talked about the geographical expansion here we've seen from Core Scientific and this scalable financing approach. So potentially looking at maybe running some GPUs or financing some of these projects themselves. You talked a lot about their power pipeline yesterday, Anthony, and if you look at the current deal for 590 megawatts, you multiply out some of those numbers, then you hold that against what their pipeline is in terms of total capacity. No wonder these guys are putting their targets up.
Yeah, absolutely. And so at the moment, the deal they're providing CoreWeave is 590 megawatts of compute power and a further 210 megawatts of ancillary power to support those facilities. And that's a total of 800 megawatts. Now, existing at the moment, they're looking at 2.3 gigawatts. So there's an extra 1.7 gigawatts there. And they're also saying at the moment that they believe they can achieve 1.5 gigawatts of compute and billable power for co-location contracts. So that's literally, not far short of 3 times the current level. And then we look at further, they talk about a pipeline which may get them an extra 1 gigawatt of power. So these are some big, big numbers that weren't talked about back on or prior to the 7th of July. So, you know, they've had a quiet period, but it looks like a few of those people in Core Scientific have been working quite hard during that quiet period to make sure if the shareholders aren't in agreement, there is a strategy to come through this.
Yeah, they certainly are. Now, talking about earnings, we mentioned Jason Less is on the program tonight. We've got really a stacked agenda here. So next week, we've got Patrick Fleury, CFO of TeraWulf. He's going to be coming on for a special talking about this new joint venture with FluidStack Google, again, based in Texas, where we're seeing a lot of this activity. Then the following day, we have Mara, CFO, Q3 earnings. It sounds like you've lined up Fred for another visit in a few weeks' time to talk about strategy. So that's going to be super interesting from Mara. Of course, we've got IREN, Daniel Roberts. He's a favorite on the channel. We're trying to work down the timing now. It sounds like potentially the 7th or 10th, TBD on the date, but he has confirmed he'll be in attendance. And just yesterday, actually, during the podcast, we were able to lock down Soluna on the 17th of November for Q3 earnings, and our good friend Ben Gagnon, Bitfarms on the 13th. Now, following that, we're going to have Jeff LaBerge on the 14th. So as you can see, pretty much all of your favorite miners will be on the channel in the next 2 weeks. If you guys have questions, throw them in the comment section. We'd love to ask them on your behalf.
And another point, Bryce, is quite a few of those interviews are going to be taking place during our visit to the state of Texas and on our tour that we're going to visit a number of the sites there. So we're going to be working harder and harder that week, not only to visit these sites, but also to have some podcasts with interviews. And we'll also be doing our own podcast during that week there. We want to make sure that you guys get to see firsthand what we're seeing from these podcasts, and hopefully we can get some sort of like site interviews with some of the key personnel there, just to explain some of the nuances that happen site to site. Me and yourself, we've visited a few sites previously, and I visited a couple of other sites on my travels as well. But I'm really looking forward to this week. It's a full packed week there, and we're having Kevin Deedy, one of the most experienced investment bank analysts in New York, and he's going to be joining us. He's part of the HC Wainwright group, and we were fortunate to go to the HC Wainwright conference in September, where all the miners were literally there giving their presentations on how they were going to deliver future capabilities in HPC. So we sat through, I think, about 16 presentations, Bryce. Also got to listen to Michael Saylor on Bitcoin. But this is the sort of, this is the enjoyable part of what we do at the moment. It's getting out there to see these sites, giving you firsthand what's going on there, and painting the picture in a way that you can understand and help with your due diligence.
I was going to say, this is my most exciting part of the job as well, is actually learning, getting out there in the field, seeing this stuff hands-on. Yeah, if you look at our poster for the Texas tour, that's my handiwork there, Anthony. You'll see a handsome fellow in the back seat. That's our good friend Kevin Deedy. You just mentioned, Darren as well. And if you look down that list, right below him is five-star Kevin Deedy from HC Wainwright. So that's just going to be an awesome time. And we intend on giving you guys as much behind-the-scenes footage, interviews, content as possible. Now, Riot earnings came out last night. We listened to the earnings call. We took a look at the deck. I got to say, slide number 1, or the title slide of this deck, very impressive. You're seeing the tone of these decks change. It's nothing to do with Bitcoin mining anymore. These are large scale data center campuses. And I did have to ask myself, Anthony, this slide reminded me quite a bit from what we saw Bitfarms last earnings presentation.
It does look very similar, same sort of style, some quite similar graphics in there as well. But really painting out this sort of like, these big HPC data centers. I've been fortunate to go to one of the largest ones in Europe, the metadata center in northern Sweden, and that was 150 megawatts. And we've talked about data centers at some of these, the miners that we look at, they're building, and they're bigger than 150 megawatts. So this is going to be intriguing to go and see again some of these sites and get that vision as to where these data centers are going to be and how big they're going to be compared to some of the other facilities on those sites.
Yeah, it should be just great. Now, keeping with that theme, another thing I noticed is the order of the slides in the deck. So we don't actually get into the Q3 results until slide 18. They spend a lot of time talking about the team, the data center construction, the plan here. So slide number 2, again, getting right into things, talks about Riot initiating their core and shell development at Corsicana. This is going to be a key focal point of what we talked to Jason about tonight. What prompted this decision? What level of construction are they able to do before a tenant or client is named? What do they exactly mean by core and shell? And really get an understanding of how this sets them up for that expected or hoped co-location contract.
Yeah, and this is sort of like quite an interesting way they're doing this. They're actually going out there and building or starting. They've already done the design and they're starting to look at now the build out of some of these facilities, even before they've got a a co-location deal in place. Now they've had significant conversations. That question was asked by nearly all the analysts last night on the call. I listened to the call this morning because I'm in UK time. And Jason said there's no deal signed at the moment, but they had lots of positive discussions, and they're building out this sort of this type of facility that can be very quickly changed. There's plenty of flexibility in there, so that when a client comes in and wants to have slightly different there, they can move to that direction as well. So, and me and you both picked up on the fact that some of these numbers in terms of the size of power are quite consistent with what we've seen with other miners and their contracts. So maybe there's some sort of standardization in terms of the size of these facilities. Remember, we heard about Horizon 1, Horizon 2 being 50 megawatts. We're hearing on these sites here 56 megawatts as the two buildings for phase one, which are going to be the first two buildings to be built. That 56 and 56 and add another 56 to it, that gets you to 168. 168 megawatts is the deal that TeraWulf have with FluidStack, supported by Google, and we keep seeing those numbers repeated throughout the both presentations. So whether that's a standard or whether it's actually there is some sort of coincidence in the fact that these sizes are more reflective of a company out there, with a co-location deal already, and they're sort of like moving to that type of thing there. Jason will probably give us some sort of response to that in terms of, maybe it is a standard bill, but very interesting point to pick up on.
Yeah, it really was. I got to give you credit for that. And the Cipher deal was right in that neighborhood as well. So if you look, they've got a dual level design at the
Yeah,
56 critical IT, 3 times 56 gets you there, or a tri-level design, which is also really cool, offering different customizable build options. That one's at 84 megawatts. So you multiply that by 2, you get up into that same neighborhood. So we've seen that with TeraWulf. We've seen that with Cipher. Potentially, like you say, maybe this is kind of the size of data center that certain
and both
co-locations.
both deals with FluidStack. So leave it there for the conspiracy theorists to do some work on it. Maybe some of our colleagues can get the drones out and have a look or whatever. But we'll get some feedback in the comments, I'm sure.
Yeah, that's funny. We won't be flying any drones around these sites. I don't want any drone liability. We're going to leave that to the experts. Yeah, and you look at the land packages as well around Corsicana. These guys aren't messing around. You don't go out and buy 500 plus acres of land just on a whim. So you can see they're really putting this strategy together. Again, you look at some of these renderings, they look very similar to what we've seen from the Panther Creek team. These are large scale, world class, hyperscale co-location facilities. Now, the other theme we heard a lot about last night, and this is going to be a real area of interest for me in tonight's discussion, the team that they've built now at Riot. Now, when we last talked to Jason, he had said, hey, we're looking to do a lot of this stuff in-house. We don't necessarily want a development partner like T5 with Bitfarms or what we just talked about this week with CleanSpark. You can see the key roles added. There's a long list of high-ranking individuals here. For me, the question is, now what capabilities do they have in-house? And are they able to even operate GPUs potentially, as we've seen IREN start to do?
Yeah, and we saw IREN also go out there and appoint significant number of employees who had the experience to deliver the types of service and strategy that they want to deliver. And it's key for all these companies. You know, you can't stress enough the importance of having a great team. It's not one person. It's not a Jason or a Dan or a Ben. It's a team, and you have to have the right team. And you can see here the highlight in the roles there that they're bringing into the organization to deliver this service. Another key point I picked up from the call last night from a number of the analysts, although Riot haven't got a co-location deal at the moment, many of them were suggesting that the location of Corsicana and of Rockdale are both situated in close proximity to Dallas and to Austin, and therefore that puts them actually from a location point of view a more preferential area. So it got me sort of like thinking, you know, that's more of a bullish statement. That's coming from the analysts, and Jason was quick to sort of agree that there. But also the fact that, you know, that a lot of questions were, you know, when are you going to be able to announce something? Is there a time frame? Do you have anything you can say? And Jason was keeping very tight lips about that. So I'm not sure we're going to get anything extra from you on that particular question. We might sort of like try to phrase it in such a way that, you know, we can get, you know, something. But he was quite tight-lipped to all the main analysts there. I'm sure he's going to be, on that particular topic itself, equally tight-lipped to us.
Yeah, we'll see if we can tease something out of them, but no guarantees. Now, we got to remember this was an earnings deck. So you get through to slide 18. Lo and behold, here's the numbers. Now, I think this is also very telling. A lot of these numbers, these are historical numbers from last quarter. You can see how quickly these companies are moving forward with these growth plans. So again, we wanted to talk about these, but realistically, for a lot of these miners, the re-rate, the market cap, the share price is really based on the go forward sentiment in the market.
Yeah, we talked about the Bitcoin mining. It is a challenge. Riot actually, you know, had a positive net income, 104 million net income. However, they did benefit significantly from the increase in Bitcoin value. That was well over 104 million. So if that hadn't been included there, it would have been effectively a net loss. And that's the challenge that you have when you're mining Bitcoin and the Bitcoin price isn't going up as quickly as the difficulty has been over recent months. We talk about the difficulty quite regularly because it's quite serious. It's like, you know, it's at least another half. I used to say it's nearly another halving. It's at least a halving, maybe even more during that period there. This last sort of 8 or 9 changes, I think it's been 8 changes higher, 1 change lower. And it's just like you're eroding the production numbers. Every time that difficulty changes, you're eroding the amount of Bitcoin these miners can produce. Now, Riot themselves were able to produce 1,406 Bitcoin. They were able to also, you know, get their HODL up to 19,287, which puts them in that sort of top 10 of public companies that HODL. So that's been important. The one thing that stood out obviously from me is the power cost there. They were able to achieve 3.2 cents net cost of power. Now, a lot of that is helped from the fact that they were able to achieve 31 million in power credits. No other mining company gets anywhere near that. And Riot benefit from having a PPA agreement at their Rockdale facility, and they have a 345 megawatt PPA there. So every time the power increases, they're able to sort of like use that PPA to sell power back to the grid, and they receive power credits, which is a credit to the next bill. So it's not literally an equivalent Bitcoin or a cash receipt. It's not. Their next bill could be $1 million, and that credit goes against $1 million. So they pay the balance of a future bill based on those credits there. So that gives you an insight to what they are there. In terms of when I look at mining companies, you always look at the non cash costs, to say, yes, they are true costs, but when you're looking at can the business manage from its cash position, the earnings suggest, yes, it can for Riot's sake there. I mean, yes, they did make, if you take away the FASB rules on Bitcoin value, they did make, effectively a loss. But actually, when you look at the depreciation and you look at the stock compensation, that puts them into sort of like a very much a positive position. So I think in terms of mining, in terms of margin was very good. Margin was 59%. And if you look at their net cash flow cost per coin, it was about $59,000 the cost of mining each coin, including all the cash costs there. So if Bitcoin price over 100,000, they're making significant margin. But when you include depreciation, and you should include depreciation, that's the cost of buying the machines to start with, and stock compensation, that's a true cost as well. That's when it gets a little bit tricky to highlight those two costs there, because they then wipe out any of those sort of margins. In terms of mining statistics, their hash rate has increased nicely. They're at 36.5 exahash there. And the utilization rate, 86%. Now, I can tell you now, this year, Riot are leading in terms of year-to-date performance. So we do monthly tables. And, in previous years, we've had Bitfarms who now don't produce a monthly update, but Hive certainly do. And CleanSpark and a number of other miners, Mara. But Riot has been, leading the way this year. So that's a vast improvement. I remember going back through 2023, 2024, we had Jason on the podcast, highlighting they had some issues there. These issues have gone away. There is now no hosted miners at the Rockdale facility, so we're not seeing any additional costs there. That's why the numbers look pretty good, actually. When you go through and look at the detail, they are pretty good. There were some one-off costs there. I mean, bear in mind, they've now sold all their Bitfarms shares. That's not been the greatest investment for the company. I think they purchased the shares at just over $203 million, and they've managed to receive about $106 million back there. And they sold that once they started to sell the shares, they sold them really quickly when the Bitfarms price was actually quite low. Bitfarms price since then has actually rallied. Now, I don't know if there's any correlation between the fact, right, we're selling shares and the Bitfarms price increased, but part of me would have hoped maybe if you're thinking Bitfarms is going to be a company that's going to deliver significant high performance compute in the future, maybe you've kept a percentage of shares in the company as an investment just to see how that worked out. But they obviously thought sell the shares, use that money as an opportunity spend, and probably we may mention to Jason, what does that look like in terms of having to sell those shares? Were you able to sort of deliver something with that $106 million receipts back to regain some of the losses that you made on the original deal?
Yeah, and we'll talk about some of those SG&A expenses. We've got some good questions there for Jason as well. Now, if you have anything specific you'd like answered, make sure you leave that in the comment section below. You just mentioned some of the monthly miner production. That stuff is all available on our website as well. If you guys want to pop over there, live miner margin, there's a ton of different data, tables, analysis, all for free, all available on powermininganalysis.com. With that being said, hit the like button, guys. Feel free to subscribe. We'll see you back here tonight for our interview with Jason.